The broadcast is now starting. All attendees are in listen-only mode.
Well, good afternoon, everybody, and welcome to our CarMark Auto Finance webinar. My name is Bill Zadice, and we're happy to have you on board with us this afternoon for our webinar that we hope that you'll find to be very interesting. Our focus today on residual-based financing for used and certified pre-owned vehicles. Partnering with dealers and lenders to bring residual-based financing to the late model pre-owned vehicle business, this is CarMark Auto Finance. For more details about the CarMark Auto Finance program, you can visit carmarkautofinance.com/demo, or you can email us at info@carmarkautofinance.com. Now, before we get started this afternoon, we want to take just a moment to introduce Peggy McCaslin, our VP and Director of Residual-Based Financing for CarMark Auto Finance. Peggy's going to be driving the show today, so she'll be on board in just a second. And also David Blassingame. David's the Managing Partner at AutoFlex Leasing and is having quite a bit of success with the program, and we'll ask Dave to share with us some of the ways his business has been impacted by the program. Now, before we get started, please make sure that you've dialed in using the phone number provided in your communication email, or that you're able to listen on your PC's speakers. We are going to be recording today's webinar, and we're going to make the recording and presentations available to you. So we hope that you will share that recording with others at your dealership or at your lending institution. You're going to be in listen-only mode for the webinar, but we do want to make it interactive, and your questions are welcome and encouraged. So please send those in, and you can submit those at any time through the questions box. It's the questions box on the GoToWebinar control panel. And lastly, if you have any difficulty during the webinar, please click on the hand icon. That'll alert a member of our webinar team, and we'll do what we can to help you with whatever trouble you may be having. All right, without any further delay, let's bring in Peggy McCaslin. Peggy's VP and Director of Residual-Based Financing, and just has a lot of experience with the program, and is going to walk us through some of the basics in understanding a little bit more about this residual-based financing solution. Peggy, good afternoon.
Good afternoon. Thank you very much, Bill, and I thank you everyone who's attending today. We're going to do a very general overview of the program, and of course, if there are any questions, I'm sure we're going to have a question and answer period, so feel free to ask anything that we haven't touched on during this short presentation. Residual-based financing, I'm sure everyone listening is familiar with the concept of residual-based financing, and that's the basis of this program. We offer this financing opportunity on both used and certified pre-owned vehicles, because as you all know today, if anyone in the automotive finance arena is aware of the fact that the consumer is very payment-minded today, and this program directly addresses that consumer group. We partner with dealers and lenders nationally on the program, and this financing program offers advantages that tie right into the, what consumers are looking for in the way of that easier payment option for consumers. You are able to find that sweet spot payment on shorter loan terms typically that your consumer is looking for. It offers you a low payment financing opportunity on your used inventory. Up to 4-year used vehicles qualify for this program. And because you're providing your consumers with the financing opportunities they need to get behind the wheel of that vehicle they want, you're promoting loyalty to your dealership. They know that they can come to you, find the vehicle they want, along with the financing opportunity at the same time. Here's an example of a typical payment option that you can now provide to your buyers on the programs with the CarMark Auto Finance program. This is a 2012 Chevy Suburban, and you can see here that those payment-minded members who are looking to finance a vehicle on a conventional loan would at 72 months have a payment of $444. And that person that's really interested in getting that, squeezing as much out of that, getting that payment as low as possible, would have to put down money into the scenario to get this payment reduced and go to a long-term, which would perhaps be outside their normal driving cycles. They may drive their vehicles typically 48 months, but have to go to 72 months in order to get the payment they want. With this program, you can get into more of a velocity lending approach where you can put your members, your purchasers into loan terms that more fit their driving patterns. A 36-month payment on the CarMark Auto Finance program is $313 a month versus the $444 at 72 months on a conventional loan, and 60-month payment at $300. So you can see that there are significant payment savings and shorter loan terms which enable you to get those buyers back into your lots more frequently to address that velocity lending approach. Our program is a true, fully insured walk-away balloon product. The member is financing the vehicle instead of leasing the vehicle, which gives them more options throughout the term of the loan as well. They can sell, trade, or refinance the vehicle anytime during the term of the loan. And if they elect to keep the vehicle through to loan maturity, an additional option kicks in, which is the full walk-away option, where when that final balloon payment comes due, the member can walk away. The original guarantee buyback provided by the lending institution when the note was funded is guaranteed to the buyer of the vehicle at loan maturity. All balloons are not created equally. Well, that really is true. Our particular program, the CarMark Auto Finance product, is a true walk-away balloon. There are no hidden costs or surprises. They have a variety of 3 mileage options. The excess mileage charge is only 10 cents a mile. And we have loan term choices up to 72 months on all vehicles 2009 through 2012. Because the member owns the vehicle, it's titled in their name, as I mentioned earlier, they can sell, trade, or refinance the vehicle anytime. And the 36-month loan term, the way this is structured is a little differently in the lease than a lease, in that on a 36-month loan term, there's 35 low payments and then one final balloon payment, which is the 36th payment. So because of all these variations and options available to the member, they have complete flexibility available to them that are provided through both a conventional finance and a lease. It's the best of both worlds. CarMark and Auto Financial Group have partnered to bring dealers access to this residual-based financing program and increase your customer loyalty for your dealer and the lender that you are working with. Our company's been offering this program nationally to lenders and financial institutions in general across the United States since 1999. And because of the uniqueness of our program in that it's a finance versus a lease, it has an appeal particularly with credit unions nationally. Moving forward. We will provide information to the dealers working with the lenders using our program in the way of a dealer alert, which will be issued to all dealer partners working with the various lenders that we are affiliated with nationally. And this dealer alert actually will provide you with a list of pre-owned vehicle opportunities, hot pre-owned vehicles, or vehicles that are strong residual-based financing candidates for our program, and opportunity vehicles based on new vehicles coming out that also present as a very strong residual opportunity vehicle. Many of the dealers working with our program actually wait for this alert to come out, and they use it almost as a shopping list when they go out to buy inventory for their stores. Moving on. We work with the ALG book period, so our numbers are good for 60-day increments. And here you can see an example of some strong vehicles on the program. There is the 2012 BMW four-door sedan 328i, wholesale plus $2,500. That accounts for a gross profit of $2,500. We'll give you on a 36-month payment a $367 payment. And then you can see in the final column there that there are the 48, 60, and 72-month payments based on the conventional financing at 100 basis points above the CarMark finance. So it builds into the program, 100 basis points below the CarMark finance. The CarMark finance is based on 4% interest, and the conventional finance calculation there is based on 3% interest. So you can see that the payments are very compelling and will drive your buyers back into your store. We have the demo link provided on the next page, where if you want to go in and take a look at the CarMark demo, feel free to go in, build cars, and you can see how simple and easy to use the calculator engine is. Moving forward. For more information, please contact Dave Ruggles, who is the CarMark Auto Finance Manager working with this program nationally, and his email address, phone number, and website address are located here. And that about wraps up my end of the segment. Bill, if you want to pick up from here, thank you very much.
Absolutely, Peggy, thank you. A great overview of the CarMark Auto Finance program and the benefits that it can bring to not only, number one, consumers in the ability to obtain lower monthly payments and the flexibility of the 100% walk-away. Tremendous flexibility there. And, of course, to dealers and to lending institutions as well. It really is what we think, as Peggy mentioned, the best of all worlds with regard to that. And that doesn't mean very much coming from me or Peggy even necessarily, but maybe from David Blassingame, who is utilizing the program at his stores down in the Dallas-Fort Worth area. David, welcome to the webinar this afternoon. If you could take just a few minutes to explain to our listeners and those that are on the webinar that are in your shoes. They own dealerships. They are in the business of putting consumers in great cars with a great payment. Can you tell us how the residual-based financing program has been a benefit and a positive impact at your stores?
Sure, thank you, Bill. Yeah, we have been in the leasing business for about 30 years now, and we, if you go back to 2006, we had 11 lease banks. Many of them had pre-owned car leasing programs, which we took advantage of. It allowed us to move into the luxury end of the business and provide very, very affordable payments on people that didn't have to have a current year model car. They could take a 1 or 2 year old Mercedes or BMW. So we had a great business in that area, and also for all our pre-owned cars. Well, with the crunch, we lost all of those lenders that were doing pre-owned leasing, and we have not had a way to do a pre-owned lease since then. Here comes CarMark and their residual-based financing program, which is something we certainly understand and know how to sell, and it has provided really a better solution for us than the pre-owned car leasing program we had before. From a benefit standpoint, it helps us, and let me say first of all, it works better on 1 and 2 year old pre-owned cars than it does on anything else. It's great on 2012 and 2013 vehicles, and we'll talk about sourcing those in a minute, but it's very, very effective there. It allows you to put your customer in a short-term agreement that keeps them in warranty while they have the vehicle and brings them back to you in very, very short order. The program also allows us to cap a lot more than we're able to cap in other programs. So if we're covering negative, it gives us the ability to cover more negative and get people out of a car that's not working for them and into a car that is working for them. We sell the guaranteed resale a lot, but that is, I mean, it's nice to have. It's not really ever been an issue because a lot of the times we're doing refis on these cars. We're refinancing them at the end of the term. Hopefully it's short enough that that's what we'll end up doing. But it is nice. Mileage costs are minimal. In fact, they're a good deal less than they are on the leasing programs that we have. So if there is additional miles, that tends not to be a deal stopper at the end if someone is turning the car back in. Interest rates are competitive with what we have with leasing right now with our other residual-based financing. And, you know, one of the biggest benefits is that we found that in 2013 and some of the 2012s, because of the way the program is configured, your 24-month term is about the same as a 60-month term. And that sounds a little crazy, but it really does work that way. So we are seeing 24-month terms on some very, very nice cars at a much more competitive rate than they would be on a new car lease at the same term. One of the other benefits, it's always in the customer's name because it is in fact a retail agreement. So if they decide to buy it at the end, they don't have to pay sales tax again. In Texas, we have an upfront sales tax, and so if you're going to buy a lease out at the end, if you're the lessee, the customer, you have to pay sales tax on the residual value. And with a balloon, they don't have to do that. So that's just another selling point. Peggy mentioned the dealer alert, and we learned pretty darn quick to start shopping for those cars because those cars are the ones that have the most bang for the buck. And one of the things we've discovered is, at least locally, our Enterprise and our Hertz dealers down here are moving cars out in the current year. They'll run them 10, 11 months, and they'll sell them. So we're already stocking 2013 pre-owned cars with 12, 15, 18,000 miles on them, and they work really, really effectively in this program. And that's why we can take advantage of those shorter terms to bring our customer back sooner and the larger advances in case we need them to make the deal. I went through that really quickly, but really, I mean, other than saying that we are doing more than one a day of these right now and have done that since we started, we're doing right at 30 a month averaging of these transactions, and the gross profit is higher on these than it is on our standard lease transaction or our retail transaction on a pre-owned car. So I guess that pretty well wraps it up. We do really well with it. We're very, very appreciative of the program and of the support that CarMark provides us, and it's worked like a champ so far.
David, thank you, and congratulations on the success that you're having with the program. Obviously, you've taken it very seriously and just done a great job of leveraging the information that you've got and the opportunity that you have to put your customers in a great car. Peggy, if you could come back in just for a second to follow up on some of what David talked about, and also we're getting quite a few questions in from our audience. Peggy, I guess the first thing, if you can explain very as simply as you can the relationship between what we do on our side and the importance to team up with other lenders because we don't make any credit decisions, and then also if you could speak to some of the what, if any, on the early termination costs, those types of things, end of term fees, that type of question that's coming across from quite a few dealers on our webinar this afternoon.
Sure thing. Yeah, we partner, CarMark Auto Finance partners with lenders because they're the funding arm of our program. Our CarMark Auto Finance provides the calculator software, which is a custom site set up for the lender. And through this site, the dealer is provided access to get in and do the calculation and establish that residual value for the app process. And the underwriting decisions, lending decisions are made by the lender. Now, if you are a dealer and you're looking to work with a lender in your region, CarMark may be able to help you expedite that as well. So you can reach out to us if we're not already working with a lender in your area. That's something we can try and get set up for you. The cost to the vehicle owner that is looking to get out of a vehicle earlier than full loan term, there's no prepayment penalty at all. So like a conventional finance, if you need to get trade a member out of a vehicle, you would simply contact the lender for a payoff just like you would with a standard retail installment loan, and then you can move forward from there. If the owner of the vehicle goes to full maturity on the vehicle and they surrender the vehicle, there is a $195 disposition fee that the member is charged, which I think you'll agree, versus the disposition fee typically associated with leases that are upwards of $500 is a very reasonable amount. Some of the lenders we work with, if the member does the vehicle owner does their next finance with them, some of them will actually forgive that disposition fee. So it varies by lender how they handle the fee with the member, but there is just only on the vehicles that are surrendered, which, by the way, our company handles the entire end of loan term process. It's completely hands-free to your dealership. Nobody's going to be dropping a car or keys on anyone's desk in your lot. If you would like to accommodate one of your customers on the program with their next going into another vehicle, accommodate by allowing them to leave their vehicle at your lot where we can make arrangements to pick it up. We would certainly clear that with you beforehand if that's something you'd like to do. But we don't typically, we'll go to the member, their home or place of business, a mutually agreeable location, and pre-inspect the vehicle, and then when they're ready, we'll transport. So it's a full-service program.
Thank you for that. There's some other questions on here. Do you have to be a CarMark certified dealer to participate? Absolutely not. We certainly are offering this to our CarMark certified pre-owned dealers. We believe that a lot of their inventory falls within some of the sweet spots that fit very nicely within the auto finance product, but you do not have to be a CarMark certified dealer to participate in the CarMark auto finance opportunity or residual-based financing as well. David Blassingame, can you speak a little bit to some of the F&I, other F&I products that may come into play here? You mentioned a lot of the vehicles that you guys have been moving through your stores have been in that 1 to 2 year old range. There's still some warranty provided on those vehicles. Have you had an opportunity to move some older units that you may have been able to upgrade to a service contract or anything along those lines?
Well, yeah, we have. In fact, we've had, coincidentally, now that you mentioned that, I think about it, we've got some units that got older on us that we were not in as good a shape on. But the residual-based financing has allowed us to go ahead and move those vehicles because they provide an affordable payment, even though our cost factor was a little higher on those. Gap insurance is a big opportunity because everybody that gets a balloon pretty well has to get gap on it. We explain what happens if you don't, and they take gap without question. We sell some extended warranties on the longer terms, but honestly, we've only done a couple of longer terms. Most of the stuff we're doing is 24 to 36, and of course that gets our customer back sooner, and that's what we're happy with. The other thing is that on the just on the advance side, since they do allow a greater advance, sometimes you don't have to sell an aftermarket product in order to get where you need to be to cover negative or to put you in where you need to be on your deal.
David, thank you. And Peggy, this may be from you another question in terms of in a traditional leasing situation, many customers find it kind of sticky in terms of the vehicle condition at the end of the term. How about under the CarMark Auto Finance situation? Who makes those determinations? Is it the dealer? Is it an inspection company? And how does the the turn-in process go with regard to vehicle condition?
Yeah, that's a really good question. Because we've been doing this since 1999, and believe me, we wouldn't still be in business if we were overly aggressive on the inspection process or not reasonable on the inspection process, because the lenders wouldn't work with us if that were the case. We have a responsibility to the lenders to treat if they're a credit union, their members, or if they're a bank, their customers professionally. We work with a third-party inspection company nationally so that the inspection is fair and unbiased. They take photographs of the vehicle and document anything that they would constitute as excess wear and tear on the vehicle. The member receives, the vehicle owner receives a copy of this inspection report at point of inspection, and that report is then sent on to our company where we review it, contact the vehicle owner and review it with them, answer any questions they have. In many cases, there are a number of items on the inspection report that we do not consider excess wear and tear, so we remove them. Or if it's something that the member, the vehicle owner, can easily address on their own, we make little cost-saving suggestions to them as well. If it's something they'd like to repair independently, the advantage of the pre-turn-in inspection gives them an opportunity to make repairs. For instance, if the vehicle has a bald tire or two, they have had the vehicle 48 months, their tires have low tread, and we've determined that they don't meet national safety guidelines, so therefore they need to replace one or more tires. There's a tire sale in their area. We've quoted national replacement price, and they can do it less expensively in their region. They're welcome to replace the tires at a lower cost, and we wipe it off our charge list. So we work very closely with the vehicle owners at loan maturity to make sure it's a smooth and easy process, which encourages them to come back and do more CarMark Auto Finance loans going forward. I hope that answers their question.
Yes, thank you, Peggy. And I'll mention to our participants on the webinar, thank you for all these questions. We're not going to be able to get to all of them in the time that we have today, but they all will be answered. We're going to take these out of the GoToWebinar dashboard that we have here, and we'll make sure that each one of these questions gets answered and emailed back to you. Peggy, just real quick on a recap, what are the miles per year, and can additional miles beyond that be included in the purchase in advance?
The mileage options per year are 12,000, 15,000, and 18,000 miles per year, and that's in addition to the mileage on the vehicle at funding. So 2000, for instance, 2014-13 vehicle can have up to 30,000 miles on the odometer at funding, and whatever option they have is in addition to that. The 2012 vehicle can have up to 45,000 miles on the odometer. A 2011 can have up to 60. A 2010 can have up to 75, and a 2009 can have up to 90,000 miles on the odometer at funding. That's a very generous mileage plan, and excess mileage charges, as you mentioned, are 10 cents a mile. I'd also like to add real quickly, because I know we have a shortage of time, but there is a 2-page addendum that the member or the vehicle buyer signs at funding that's in addition to their standard loan docs that covers all their rights and obligations in regard to that final payment when it comes due. And it also has a paragraph that lists, the basic excess wear and tear criteria, so that they have a full disclosure of any areas where there may be potential charges or questions, and our contact information is also on that same addendum.
Thank you. And David, we're going to let you have the final word today. For those other dealers across the country that are online right now, what kind of words of wisdom can you leave with them as to how this residual-based financing product has been a positive for AutoFlex Leasing?
Well, you know, it's the second time we've worked with them because we worked with them before with a funder several years ago. What Peggy says about their end of term is absolutely accurate. I've worked with most of the lease funders that have been in business in North America over the past 30 years, and the CarMark program, Peggy's program, is the best, easiest one I've ever had to work with. They handle things, it's a common sense kind of thing. Maybe because they're credit unions, majority of their customers are credit unions, and they're all very, very customer conscious, making sure that their members are happy. But their end of term is really, really easy to work with, and we found it just to give us a big advantage in the marketplace to have the program available. Makes us more competitive on some cars that we probably wouldn't have been competitive on, and it helps us move people into better cars than they would have been able to get. So we're really excited about it. We enjoy it. We like it, and we'll keep utilizing it as much as we can.
David Blassingame is the managing partner at AutoFlex Leasing. Peggy McCaslin, VP and Director of Residual-Based Financing. Thank you both for 30 minutes this afternoon. We appreciate your help and just a great webinar, a great informational webinar with regard to CarMark Auto Finance. For more information, here's the website once again. You can type in a few options, maybe some vehicles that you currently have in inventory, give you some opportunity there to work that through that calculator at carmarkautofinance.com/demo. If you would like some more information, the email is info@carmarkautofinance.com. We'd be happy to get you any information that you might desire with regard to the program. Also want to invite you to Used Car Week. That's coming November 11th through the 15th at the Manchester Grand Hyatt out in San Diego. We're excited about the lineup of events that we've got going on throughout that week. The CPO Forum, the pre-owned conference is going on early in the week. The RE3 Conference, the National Remarketing Conference, and the Subprime Forum. All of them come under the banner of Used Car Week. That's November 11th through the 15th in San Diego. If you're in the used car business, you're going to want to be out in San Diego, November 11th through the 15th. You can come for one, you can come for all four if you want to, but make sure you're there for Used Car Week, November 11th through the 15th, San Diego, California, at the beautiful Manchester Grand Hyatt. I want to thank you for joining us today, and a reminder that if you aren't getting your news on the used car side of the market from autoremarketing.com, you need to be doing so. Log in to autoremarketing.com. Right there you can register for free subscriptions to the industry's top e-newsletters and information, keeping you in the know and on top of the pre-owned markets. It's autoremarketing.com. And once again, we'd like to thank Peggy McCaslin with CarMark Auto Finance and David Blassingame, AutoFlex Leasing. Thanks also to all of you that registered for the webinar and attended today. For our webinar team, Nick Zulovich and Krista Lupin and Katie Nolan, my name is Bill Zadice. We'll see you here next time with our CarMark Auto Finance webinar.